What's going on, guys? Today is day 4 of the 2024 TED course by Velas. Topic: Supply and Demand. What is supply and demand? Supply is the amount of stock that is offered at a certain price. When demand exceeds supply, it causes a drive up in price. When supply exceeds demand, it means there are no more buyers looking to buy at the price offering. You will see often a supply zone created on the chart by the amount of buyers who sold positions in fair value. Every shareholder values the price of their holdings very differently. Understanding supply and demand will give you a better understanding of how the market works. What is demand? Demand is a point where fair value led to an imbalance in price, with buyers anticipating a move higher. When price comes back into demand, you could see past orders as well as new buyers placing orders inside demand as newcomers expect a drive in price as we return. New buyers inside demand could expect a drive in price at a return due to the past movement outside of fair value, now demand. How will I know if demand is likely to be respected? I will usually be able to tell if demand will be respected if we have a slowing of selling coming into a demand zone. What this usually signifies is a fear factor to the sell side. Sellers are fearful of a move back in the opposing direction. You will likely see a volume coming to a slow. You can also see consolidation inside or just above demand. This could mean we are meeting fair value again, and buyers are very likely to start opening positions once again. When will demand likely be invalidated? Demand will likely be invalidated when we have a strong and consistent sellers selling hardcore inside to demand. This could mean that there is no fear factor to the sell side and the confidence could lead others into opening more sells. This is when you want to stay out of playing any position inside of demand. How will I know if supply is likely to be respected? I will usually be able to tell if supply will be respected if we have a slowing of buying coming into a supply zone. What this usually signifies is a fear factor to the buy side. Buyers are fearful of a move back in the opposing direction. You will likely see volume coming to a slow. You can also see consolidation inside or just below supply. This could mean we are meeting fair value again and sellers are going to bring down the market. When will supply likely be invalidated? Supply will likely be invalidated when you have a strong and consistent buyer still buying hardcore into supply. This could mean that there is no fear factor to the buy side and the confidence could lead others into opening more buys. This is when you want to stay out of playing any position inside of supply. And with that being said, that is, sell positions if you want to get into a short. Now, playing into longs inside of a supply zone would be also a little bit risky because here's what you could do. Although you could see strong buying into a supply zone, there are times where we see strong buying and then this thing just reverses inside supply and starts dropping hardcore. Now, it's very unlikely, but you will see it, and that's why you want to just not put on any risk at that point, unless you have a great risk to reward scenario. But at that point, buying, there wouldn't be a point at which you'd be wrong to put into a stop loss. Right? So you want to stay out of it overall. Why most traders fail? Most traders fail not understanding supply and demand because they are buying when they should be selling and they are selling when they should be buying. Trading with the knowledge of supply and demand could put you in the shoes of smart money and allow you to capitalize off bigger moves. For every buyer, there is a seller, vice versa. For every buyer, there is a seller, and for every seller, there is a buyer. Most don't understand supply and demand concepts and get caught up buying from a pool of big money pockets who are selling the market with huge size. Had that buyer had known, he could have saved himself the loss. So think of it like this. If you were to go and get into a long position, all right, so the first thing I am going to go over, before I even go over how to draw supply and demand, how to spot them, how to spot weakness, strength, and so on and so forth. This is something important that I want to go over to make you cautious of. Let's say here, what do you have here? You have very strong support here at this yellow box right here. This is support. And then you have demand. I don't know why I drew this red, but we're going to make this green right now. And this is going to make you more aware of these things so that you're not getting wicked out. All right, so check this out. Here you have very important support, right? Very important. Keeps bouncing off support. Keeps bouncing, right? Keeps bouncing. Now look at this. Right here, you would have had people waiting for that break of support, and they got in short below that break. Now we come down just a few ticks here. I'd say about 4 ticks there. Comes down and bounces completely and drives up about 25, 27 points, 27 ticks there, right? Now, had that person had known that there was a demand zone right below here, right below the support, they wouldn't have gotten stopped out of their position, or as I like to call it, wicked out, because if you go to a higher time frame, let's check this out. Well, you can already see it on this time frame, actually. You see that body came down, but the body did not close on a 1 hour time frame. We just wicked out completely, right? You had sellers getting in short below there, looking at past time here and the selling going on here. But look, although we had a lot of selling here, we still tend to bounce every time we hit it. So that's why taking past market structure and information into account is going to be very, very important with understanding what could happen here. Now, understanding that there was a demand shortly below support, you wouldn't have played that, right? You could have even gotten, seeing here that we came below support and bounced at demand, you could have gotten to a long position inside demand here, anticipating the same move that we had here, right? Well, in this case, we had the same thing happen. We came down, broke below support again the next day. This was Monday, this was Tuesday, and then look, boom, stops got hit out again. I'd say stops probably would have been put right around 5516. And then look at that. They stopped out and the market ran up once again. Do you guys see that? So it's important to understand. Listen, this is what I always tell people. Even if, people get one strategy and they use that strategy, right? They stick to it and they swear by it, whether it's, fair value gap trading, whether it's supply and demand, support and resistance, SMC, whatever it is that you are trading, they stick to that one strategy. Well, here's the thing. Yes, hone in on it and use it, learn it, apply it. But guess what? Never, 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 fail to learn all of these other strategies, because had I have not learned supply and demand and I only played support and resistance, guess what? I would have got wicked out here and I would not have even known why. Do you guys understand? That's why it's important to use all these strategies, because then you could go ahead and you can understand what other traders are doing while trading in the market. So let's go up here. We got another example here. Actually, let's stay down here. There's another example right here, right? We come down, break below support, hit demand, and skyrocket up, right? Let's come up here to supply. Let's just pretend that this supply zone isn't here, right? Let's pretend that's not there. We have resistance, support, resistance, resistance, right? And then look, resistance. You break above this resistance, and then look what happens. These people, these buyers up here, did not know that we had a supply here. They were running this thing up. They had their stops probably just below this resistance here. And then guess what? What do we hit here? We hit a supply zone. Now, could that have been their price target when they played long above resistance? Yes, it could have been. But most likely, looking at how many ticks were here, you could have saw them people stay in their trades expecting a move higher than the move that we had here, right? Now, that is very, very important, right? Because look, your demand. These people could have just waited. Or, if you're a scalper, you could have known that, all right, this supply zone is going to be my price target. So that is why understanding supply and demand, even if you don't want to play out of it, is very, very important. Because remember, what does the market run off of? The market is, as a whole, supply and demand. So understanding it is very, very important. And also, using all of these other strategies and applying them on your charts is going to allow you to see what other people are doing. A lot of times in my streams, you guys see that I'm calling out where people are getting in and where people are going to get stopped out at. And a lot of you guys think it's very cool, but it's understanding all of these strategies as a whole that I understand where these people are going to get stopped out at, where they're entering their trades, and so on and so forth.